Scalping in Forex. If you are new to Forex trading, you might have heard the term scalping being used frequently. Scalping is a popular trading strategy used by Forex traders to make quick profits. In this article, we will provide a complete guide to scalping in Forex, including its benefits, risks, and strategies. 1. What is scalping in Forex? Scalping is a trading strategy where traders aim to make small profits by buying and selling currency pairs multiple times in a day. The objective of scalping is to take advantage of small price movements in the market. A scalper may hold a position for a few seconds to a few minutes, but never more than a few hours. 2. The benefits of scalping in Forex. Scalping has several benefits, including quick profits. Scalpers can make quick profits by taking advantage of small price movements in the market. High win rate. Scalping strategies have a high win rate because traders are taking advantage of small price movements. Low risk. Since scalpers hold positions for a short period, they are less exposed to market risks such as unexpected news events. Flexibility. Scalping can be done at any time during the day, making it a flexible trading strategy. 3. The risks of scalping in Forex. Despite its benefits, scalping has several risks that traders should be aware of, including high trading costs. Since scalpers trade frequently, they may incur high trading costs such as spreads and commissions. Psychological pressure. Scalping can be stressful, and traders may feel pressured to make quick decisions. Market noise. Short-term price movements can be noisy and unpredictable, making it difficult to predict future price movements. Broker restrictions. Some brokers may restrict or ban scalping, so traders need to choose a broker that allows scalping. 4. Scalping strategies in Forex. To be successful at scalping, traders need to develop a solid strategy. Here are some key factors to consider when developing a scalping strategy. 1. Timeframe for scalping. Scalping is a short-term trading strategy, so traders need to use short timeframes such as 1 minute, 5 minute, or 15-minute charts. 2. Indicators for scalping. Traders can use technical indicators such as moving averages, Bollinger Bands, and stochastic oscillators to identify potential trading opportunities. 4. Market hours for scalping. Scalping is best done during the London and New York sessions. 5. Order types for scalping. Scalpers use market orders or limit orders to enter and exit trades quickly. Tips for successful scalping in Forex. Use a reliable and fast trading platform to execute trades quickly. Keep an eye on market and be prepared to close a position if the market move against you. Set realistic profit targets and stick to them. Use a stop-loss order to limit potential losses. Keep trading discipline and don't let emotions take over. Monitor the spread and choose a broker with low spreads to minimize trading costs. Keep a trading journal to record your trades and analyze your performance. Scalping typically involves opening and closing positions within a few minutes or even seconds, and traders who use this strategy often use technical analysis and charting tools to identify short-term price trends and potential entry and exit points. They may also use high-speed trading platforms and advanced order types to execute trades quickly. While scalping can be profitable in the hands of skilled traders who are able to make quick decisions and manage risk effectively, it can also be risky and is generally not recommended for beginners or traders with limited experience. This is because scalping involves taking on a high level of risk, including the risk of losing more than the initial investment. Additionally, scalping requires a significant amount of time and attention, as traders need to monitor the market closely and be able to react quickly to changing conditions. Scalping can be an attractive strategy for traders who prefer fast-paced trading and who are able to handle the stress and pressure of making quick decisions. It can also be a useful strategy for traders who have limited capital or who want to diversify their portfolio by trading in multiple markets. To be successful at scalping, traders need to be disciplined and have a well-defined strategy that includes clear entry and exit points, as well as a plan for managing risk. They also need to be able to handle the psychological challenges of scalping, which can include dealing with the pressure of making fast decisions, the risk of losing money quickly, and the temptation to overtrade. Scalping can be done manually, using a trading platform, or with the help of automated trading software. However, it's important to be aware of the risks associated with automated trading and to use a reputable provider that has been thoroughly tested and vetted. Overall, scalping can be a profitable trading strategy for experienced traders who have the skills, knowledge, and discipline to implement it effectively. However, it's important to carefully consider the risks and to start with a small amount of capital until you have gained sufficient experience and confidence. Scalping in Forex is a popular trading strategy used by traders to make quick profits. While scalping has several benefits such as high win rates and low risk, it also has risks such as high trading costs and psychological pressure. To be successful at scalping, traders need to develop a solid strategy, use short timeframes, and keep trading discipline. Before ending the video, I would like to say if you do not subscribe our channel, please subscribe and click the bell icon for never miss an update.